Again, quickly going over on this morning's theme with the German PPI, that was slightly worse. Have a few members did point out that been it slightly worse. It wasn't overly worse, but the DAX has rallied, and we'll go through that quickly later. Roy spoke, but I don't think he's a voting member of the ECB. And we said earlier on, most of the ECB are on blackout because of their meeting on Thursday. 1:30, housing starts comes in and building permits. I think Bianca on here made a quote yesterday that have a look at the lumber prices because they were fairly important in that every crash that's come out over the years has been started from a drop or a interest in the lumber prices. Obviously, stocks came off yesterday. It was the worst indices day since October last year. That's how much of a rally we had in the market. And we did mention that yesterday morning, most of the news that came out was fairly bearish. Quickly going through the news, the US infrastructure deal looks dead, i.e., not to be passed by Wednesday because the Democrats need 11 Republicans to vote to get past their 600 billion infrastructure view. However, Mr. Schumer overnight, the US Senate leader, has said although Wednesday was deemed to be a deadline, it is no longer a deadline in his book. The other thing that's very interesting this morning, not my cup of tea, cryptocurrency. The US Treasury has told regulators to act quickly on the stable coins rules. Now, rumors have gone around that if the Bitcoin closed below 29,500, remember the close on cryptos is at 4 p.m. UK time, then they expect a stampede to the exit door. Japan core inflation hits a 15-month high on energy costs. Obviously, that is inflationary, although we can't mention the word. UK-wise, Prime Minister Boris Johnson looks to unveil the new national insurance payment increase by up to 1% to fund the social care and to raise the extra 10 billion needed. News in the US recession back in 2020 only lasted for 2 months and ended on April 20th. That's doing the rounds on Wall Street, which is obviously a bullish part of the news that's come out. France have entered the fourth wave of the epidemic. That's out on the French newspaper this morning. And obviously, the new member of the Bank of England, a lot of people said, who is this person? Mann, it's actually Catherine Mann, strange name. Yeah. She does not see an inflationary spiral. And she came in again with Mr. Haskell yesterday, saying they don't expect to taper anytime sooner. Big words, obviously, Jerry and Matt will be very keen on it. The US 10-year yields were down as far as 1.2 yesterday, and that will obviously bring a flight to safety going on in the markets. Quick one, as someone said to me today, one of the reasons why they're worried about the cryptocurrency is that the margin calls and a lot of retail traders use leverage far too far. So, a word of warning we found out yesterday: if you over leverage trades when the market does go peak on, the more leverage you have, the more dangerous it is when you come out of your position, i.e., you're offside. Right, going into the markets. What happened yesterday? Monday, summer markets very volatile. I think we'll carry on again today, and I think what we'll probably see this morning, 8 o'clock, is exactly what we saw at 2:30 yesterday on Wall Street. Total chaos. I think we'll probably see what we see at the moment. We're seeing the market up 0.5% on FTSE and 0.5% on the DAX as well. On these volatile markets, as we said before, for those of you who want to trade DAX, if you want to have a bit of sense about you, why not have a look at Euro stocks instead? It's slower and there's more volume in there. Again, what we found out yesterday, it wasn't the 8 o'clock trade because some idiot yesterday in the DAX bought the DAX up 10-15 ticks at exactly 8 o'clock. And remember, what did we say? 8:01. 8:01. It was clear as a bell when the market in the DAX dropped out of the sky. And I think most people have made their money by 8:05 and 8:06. And the wise people took their money 3-4% off the table and took the freedom day off, so to speak. So again, going on today, again, there's not much news out today. We said yesterday, I wrote 3 pieces of news out yesterday. Today, we've probably got one more because we've got housing starts and building permits out at 1:30. Not the biggest figures in the US thing as well. So we're probably going to get a very quiet thing from ECB because they're on blackout. But again, summer markets bring the liquidity as such, and we can see some very quick, fierce moves at 8 o'clock, and obviously again at 2:30, and that will carry on in a way for the rest of the week. So in theory, we can cherry pick. It's very easy. We have one victim in our office who traded, how many times was it? 33 times, which is the record to trade in a market where we should only really be trading 5 or 6 times a day. In also enabling us to trade our multiples and run some of our trades more than 3, 4, 5, or 6 times the size of our losers. Obviously, yesterday with that one stage, the DAX being off 2%. We can run our profits a lot further than most people did using the multiple theory as such. Again, those of you I've sent the emails to who want to look at the Chicago Mercantile Exchange site, I'll be putting a few Zooms out there and a few courses you can look at in a quiet market to stop you from trading, because that's one of the key things today. Trade when it is there. When it's not there, don't get sucked in to doing the stupid trades. And we'll come back on those CME things later. Right, George, are you awake?
Yep.
Yeah. What are you looking at today then?
I'll do FTSE.
Okay, FTSE. So we've just seen the DAX zoom up here. Oh, I'll put the shared screen up here. The last 5 minutes, we just seen it zoom up from 750, 45 ticks. Like we were saying earlier on, we saw the move yesterday. And I'm trying to look at some levels here. As you see on the O's and the P's and the Q's yesterday, how quickly we come down. We could obviously do the reverse of that this morning. So we're already at 152.06, highs of the day. And we could go as high as 15.272. Those who do market profile, that's the bottom of the R from yesterday. I think you can see it on the Educate to Trade platform. Right, here we go for the open. Expect volatile and expect a fairly violent moves both ways. Those from yesterday, we expected selling on the opening. We should expect a fair bit of buying on the open because we are up 100 ticks or 0.6%. I'll put it on the 1 minute chart. Anything there, George?
No, it's just ticking up a little bit.
I mean, it's weird from the last 20 minutes, we're up almost 60, 70 ticks.
$83, it's come off 7 points, the FTSE.
Yeah.
But
same with the DAX here, we just had a 20 tick come off. I haven't traded yet. 30 ticks, 40 ticks. Very volatile. Here we go, all the way down. 51. Yeah, nasty.
choppy, very
as
choppy.
I said today, we expect it to be choppy. Yesterday was very clean. Again, the POC in the DAX, what did we get down to just then? 84, value high, POC almost there. But at the moment, yet to challenge me to trade. Horrible in that sectors. We did say yesterday, we might have to wait till 801, 802. But yeah, highs to lows, 40, 50 ticks. And there we go. Look, yeah. Again, easy to get sucked in as it was yesterday, and yet to challenge the scorer. But here we go, the DAX coming in. I've got my offer in at 15.272. But again, if you've seen some buying,
The FTSE done the same. It drifted off like 10 points, and now it's going.
Exactly the same.
No, it's hopefully going.
Again, being patient. I mean, having a look at that wick, that 1 minute wick at 8 o'clock. that was horrible and not nice at all. But since then, I think since we probably broke double O, it's weird how we went to almost a value high and all the way back. But it's not going to be easy today. It's going to be very choppy. But that buying we thought we'd see at 8, we are now currently seeing as we come up. Right, cherry pick the trades again. Those of you who've got one-to-ones will come back to you. Okay, have a good day.
This is so choppy.
Cheers.
Cheers, Neil.